This video is probably going to save your day trading career. All of these ideas are extremely overlooked, but extremely important if you want to grow as a day trader. So if you practice everything I say in this video, you're probably going to be a successful trader. First things first is trading off fear and emotion. The two never go hand in hand. Usually when I'm trading, if I get into a position that is too large, or I'm in too large of a position and I feel myself getting scared, then that's typically time for me to size back down and go back to a smaller position size that I'm usually comfortable with. A lot of people like to size up and size up and size up to capitalize off profits. But usually when that happens, you find yourself getting a little bit more emotional because you have much larger P&L swings. So you really want to try to find that sweet spot on where your mental and your emotions can handle it without getting bombarded with emotion. Or if you find yourself just having a bad day where your emotions are heightened even outside of trading, it's probably best not to trade because your judgment is going to be clouded. You're not going to be thinking straight. You're not going to be making good decisions, and it's just not good for your account. So when you approach a trading day, make sure you're really grounded. You're feeling good. You're in a good place mentally, and focus on taking trades and position sizes that make sense for you and you can handle mentally and emotionally. This next one is the biggest downfall to most traders, and that is preserving their capital. It's like when they get into trading, they're preserving capital just goes out their mind. They completely forget it. Like an NBA player stepping on a basketball court and completely forgetting all the plays that were drawn up. That's how traders are. It seems like when there's major news events or there's weeks where you probably shouldn't be trading, like CPI or FOMC. It's just like it crushes so many traders because they don't focus on preserving their capital. The only thing they're focused on is making money. Well, to make money, you need capital. So preserve your capital in order to make money. Don't trade on stupid weeks where we have all the Fed members speaking. That's a complete circus. And don't trade when we have FOMC or CPI or NFP. Just don't do it. It's not worth it. Use that time to preserve your capital and don't risk your account and trade another day. The next thing is always be able to adapt. The markets are always changing. There's always something new being thrown at you. If you go back to the markets when we had COVID, when the VIX was spiked all the way up into whatever number it was, and there's extreme volatility and fear in the markets, that's a completely different story then than it is now. There isn't as much volatility in the market now compared to what it was back during COVID. So you got to learn how to adapt and be able to change as the market changes. This could change up your strategies, could change up your position sizes, how you take trades. Always have a plan to test new strategies, test new ways to trade, and be able to adapt with the market changes. This next one is extremely overlooked. I don't know why people don't do it, but you really need to. And that is have a trading journal, whether you have a notebook where you're writing down all of your trades and what you took. You have an Excel sheet that you're logging all your trades, or you're using an online automated trading journal that automatically logs all your trades. You can use TradeZilla. This is a good example of a trading journal. This is a very, very good tool. It automatically plugs into your broker and inserts all of your trades into the trading journal in TradeZilla, and it shows you your P&L, what trades you took, how big your losses were, profits, wins, losses, it shows you everything. So if you want to check out a good trading journal, check out TradeZilla. Definitely recommend it. This next one I really try to focus on because it's extremely important. Do not focus on intraday profits. Focus on the long term. Day trading is a long-term play. It is not a race. It is a journey, right? If you just take small profits every single day, you might have a couple red days each month, but those small profits add up. And when you look at your P&L at the end of the month, you're going to think, wow, I did really well for myself. That's because you took your profits, you didn't get greedy and try to make more money every single day. Focus on winning the weeks. If you win the weeks, you win the month. If you win the month, you win the year, right? That's how that works. You focus on just winning the month, you're going to find yourself at the end of the year with a lot of money in your pocket. And that's from taking small hits. Everything I covered in this video is a fraction of what you should be focusing on as a trader and getting better at every single day. Day trading is a major skill that takes a lot of time to get good at, but focusing on what I just mentioned will definitely give you a major push in the right direction of becoming a successful day trader. And if you practice this, chances are you're probably going to be successful. So with that being said, if you like this kind of content, be sure to smash the like button down below. Subscribe to the YouTube channel if you want more daily content just like this, and I will see you in the next video. Cheers.